All right, welcome everybody. It's time for earnings revelations. First off, in the live trading room today, we not that everything's going perfectly well. We did an option trade in Mobileye because it looks like we are going to get stuff there that's going to do better. We had Medtronics the other day, which had great earnings, didn't do much, but the big one was one thing we noticed was that to take out the implied vol, which was like I think around 184,000. Someone went all the way out to January. The January 17th, 150.70 strike calls. And that started to build all day long. And I kind of changed that up this morning. You can see the date here. This was a post in the live trading room for our traders. What I came up with was to play NVIDIA was not just for the earnings event now, but possibly end of year rally A, B, Federal Reserve C, more guidance, and other companies saying they're still looking to buy Hopper, which is the GPU unit for NVIDIA, and Jensen Huang came out today and said incredible, and I quote, incredible demand for both Hopper as well as Blackwell chips. Now, what we were looking at is to go out in time, which was a little expensive, and take some of the implied vol out of the market. This is some options type of opportunities that when your implied volatility is greater 2 times, 3 times than its historic and implied 30-day. One of the things that you start thinking about is, even if the stock goes up, you're going to have a hard time making money because it's already built in. So if you go out in time, you have theta, time is theta, you go out in time, and it kind of reduces that implied volatility, but now we need the market to move. So if it doesn't really move, you're not going to get crushed with any kind of overpriced valuation in the near term. So we did do the January 17th for 415. We'll see how that plays out for NVIDIA. The other trade that we had on was going to be underwater, but a nice little trade. Snowflake, implied move of $14. We were looking for like a 15-cent earnings per share on $896 million in revenue. So we were doing a trade here in the December 20th, 35 strikes paying $2. So that trade is probably, it's a winning trade, but the strategies should have been maybe something different, but it's always fun to trade stuff and make recommendations in hindsight versus reality. Snowflake is trading currently in the after hours at 153. So those in the money, those call spreads, the 30-35 call spreads we recommended in the live trading room today, they're gonna blow up. So that'll be a nice trade for tomorrow. Here's NVIDIA over here. It's, anyone that bought maybe options that expire this week or sold premium will love that. If you sold premium, you're going to love it because it just didn't move. I mean, I think so much good news is built into this stock that for this week option expiration, and it could have gone anywhere. They were looking for an 8% move on the stock, $12 up or down, either way. Personally, I still think that this is a longer-term play, and we might have a delayed reaction to the upside in the weeks to come. So I'm still going to hold on to the NVIDIA, especially the January 17th expiration, the one double nickel, 170 call spreads. I'll let you know if we change and decide to get out of those. Either way, some nice shooting there. What about some other trades that we've got going on? The newsletter this week, by the way, we do have, just to let you know, we sent an email alert out this morning. We're going to get rid of that. We had a list to buy target this week. It never got filled. This morning I did send, in accordance to what we do with our advisory service, an email to say, hey, cancel these orders. Because, you would have been filled on the stop before you got filled on the long. So we never got filled on any of it. We canceled the entire order. Now, targets, they missed on their revs. They missed on their EPS. But sales were about 1% greater than the same quarter a year ago. The problem with Target is that they kind of lowered their guidance for the current quarter. So they probably feel with 5 days less shopping, they're not going to sell that much or do as well as, say, their competitors like Walmart or Costco. Personally, there's a gap in the market around 110. I'll look at it, 110, 115. I'll look at Target again down there because I still think that that's going to be a pretty decent play for Q1 and into the second quarter next year. We're trying to add Disney, Alphabet. We're in. Here's some things just in case NVIDIA fell all the way to 120. We wanted to buy it. We changed that order up because, again, this newsletter is done on the weekends. We're trying to get into Alibaba at 81, Lululemon. We got filled on a half-size position at 305. Other positions that you can see we have on, we covered that put option back basically on Monday, so that was a nice trade there. I'm not saying every trade's decent, but pretty well. Some are better than others, right? Option, we're still in the January IWM. I think that's still going to be a good play. You can see we're in Google, we're in Disney, Devon Energy, Insight Pharmaceutical. We got stopped out. Now this is an interesting trade just to go through some of our positions. We bought this stock at 66.35, got out a half at 73, moved the stop up rather than have it at just right at break even, and they popped us out. So we still made money on the trade. Bought MGM Grand, we're in Hewlett Packard, Southwest Airlines, Beamer Energy, Imaging, and Louis Vuitton. As I told you weeks ago, if it got down to the 120 number, I'd be looking at buying Louis Vuitton. And so here's some of the stuff this is what we look at in a live trading room. Obviously the SPY, the Qs, the Russell, which we have a position in, as I shared with you. Google have a position in. Mobileye. Now, I just told you a few minutes ago, Mobileye was a trade room. So there's a difference between what we do. We have an advisory service that has a weekly newsletter, and people, because a lot of people can't take and come into the trade room, but what they do is they come in the trade room, sign up for the trade room text alerts, and that's where we send out those text alerts for specific trades, like Snowflake today, like NVIDIA, and Mobileye. In the live trading room, we're obviously detailed to trading those particular names. So the newsletter also just takes those swing trades and maybe turns in, at times they might be position trades. In addition, we also have the algo room running. So we have, in my advisory service, we have multiple rooms running as well as a stock trading for swing and position trading for our clients. And then we cover that obviously in the market. Alibaba, we're looking selfishly to get in on more of a dip. And with Uber, this is another trade that we took a small position in. It was a trade room trade, and looking at buying it if it dipped more into the 66 change, which we didn't get this week. So I just thought I'd give you a quick review of what's happening here at Person's Planet, and kind of like a come see, come saw week, so to speak, right? It wasn't really exciting. If you take a look at the trading range here, it's very choppy. Not much is going up. Overall market, we got a big downdraft here. Got filled on Louis Vuitton. And that, I believe, should see some pretty decent upside. If you understand my previous reports or had listened to them, not understand, poor choice of words. Louis Vuitton, I mean, my gosh, Tiffany's, you talk about the staple of 72 subsidiary companies under their wing besides just Louis Vuitton. Whispering Angel wine, we're talking Hennessy, Dom Perignon, Veuve Cloquet. I'm pretty sure around the globe, people will be drinking a lot of champagne, especially towards the new year. So this, I think, was a discounted price for us, and we have a very small risk involved here. Lululemon, we got popped in at 305 right here on Tuesday. And so, nothing to be proud of it's up a couple bucks, and we'll see where it ends up. If we get maybe a 3% upside out of the trade, we'll start trailing the stop. It's a small position anyway. Mobileye with automated, again, that was the big buzzword the other day, was automation and driving. And I think the financial media went nuts talking about Waymo, which is the subsidiary of Google, and looking at autonomous driving vehicles. And Mobileye is actually the software and the company that most car companies, Tesla does not use them. They have their own technology, but almost every car in the world uses Mobileye. Funny thing is, Intel can't make a semiconductor chip to save their life, but they own a 10% stake in Mobileye. Let's take a look at this for you in case you did not know this. Maximize sell, and we're going to go straight over here to a daily chart. My 2 cents is we got a potential upside, minimum objective $20. There's the gap in the market. Look at the on-balance volume trending higher. As long as we see the market improve and the person's pivots giving us a targeted higher high and a higher low. That's the red dot there. It'll be shown a little clearer here with the 60-minute. There you go. So for tomorrow, we're targeting, and that's what that line represents. It's targeting a higher high and a higher low. And if we continue to trade north of the pivot points and the person's pivot indicator forward projecting a bullish outlook, we like that particular trade. And so we'll see if we get some more follow through upside out of Mobileye tomorrow. Thanks for listening. Again, I just wanted to give you a quick synopsis of what we're doing in the room, what we did for the biggest, baddest boy on the block, NVIDIA, and how we're trading other technology stocks like Snowflake. Have a great evening, and as always, if you like what you see, give a thumbs up, and you can always subscribe and get these videos automatically in your inbox when they come up. Thanks for listening again. Have a great rest of your week. Until the next time, have a great trading day tomorrow.